Hello there. Welcome to the Open here on BNN Bloomberg. Happy Monday. Let's get to the big stories we're bringing you from our newsroom. You can see there's some pressure on Eldorado Gold in the pre-market. That company plans to buy foreign mining for $3.8 billion to create a gold and copper producer that will have output of about 900,000 ounces of gold in 2027. The deal will also bring together development projects in Greece and Saskatchewan. The combined company will remain based in British Columbia under the Eldorado Gold name. Dye & Durham says it posted a loss of $88 million in fiscal 2025. Revenue was just over $100 million in the first quarter of this year. The financial filing is expected to revoke a trade order issued by the Ontario Securities Commission in December. I should have said a cease trade order imposed on management. And Dye expects its shares to resume trading on the TSX. Dye has been focusing on restoring operational and financial stability and says it will outline its full strategy at a shareholder meeting in March. And U.S. President Donald Trump is getting ready to launch a strategic critical minerals stockpile, according to Bloomberg. This $12 billion U.S. stockpile is aimed at protecting manufacturers from supply shocks and cutting America's reliance on Chinese rare earths and other metals. This reserve will include minerals such as gallium and cobalt, used in products such as iPhones, batteries, and jet engines. And there's a look at the U.S. futures. Looks like we could get a fourth day of selling in the S&P 500. Let's see how the TSX fared on Friday. It was a nasty drop, more than 1,000, fueled by a rapid decline in gold stocks. And let's have a look at oil and see how it's trading this morning. It has come off recent highs and under pressure right now, down around 4%. Speaking of gold, there was a rapid correction last week, and gold looks like it's going to take another hiding in trading today, albeit, well, it's only down about 0.1%, not like the dramatic selling we saw on Friday. Canadian dollar, let's check it out. And it is broadly down against the US dollar. And finally, Bitcoin, that has suffered in the selling of assets seen as riskier in the past few days. Let's see how the biggest crypto is doing. It is mounting something of a recovery, but look at that chart. It's down more than 22% in the past year. Right, so the S&P 500 looks as though it's going to open down again today. Gold under a little bit of pressure today, slid on Friday, and silver took an even bigger hiding after its massive run-up. Prices for those precious metals remain low, are lower than their record highs. Our guest says corrections shouldn't be a surprise. There's no need to make any rapid moves. We're joined by Jim Thorne, Chief Market Strategist at Wellington Altus Private Wealth. Great to see you. Good morning. How you doing? Good. Commerzbank are saying that this sell-off in precious metals demonstrates that momentum isn't enough. You can't rely on it to just keep going higher.
You sell parabolic charts. That's basically the technical rule. Mm-hmm. Love gold and silver and materials long term,
right?
But many of them have gone too far too fast, and they can correct for whatever reason when they go parabolic, and when they do, they're violent. I think gold and silver are now in a corrective phase. Let's just let this settle out. Everything's okay. Mm-hmm. Gold's going to be 10,000 by the end of the decade. There's no need to rush. But at the same point in time, you've got to understand that the market does get emotional on the upside and on the downside. And you just have to quell your emotions and take what the market gives you.
Why will gold go to 10,000 by the end of the decade, Jim?
Well, I think there's this view that fiat money and excessive amounts of debt, the big trade that we have talked about through all our whole career, Andy, is finally coming to fruition. I don't think that's going to go away. With the president nominating Warsh as a new Fed chair. We're in a new era, but it's going to take some time. And so I would expect, this theme to last until the end of the decade. So, I've always suggested that you have 5 to 10% gold in your portfolio. And I do not dissuade anybody from doing it. But if you have a 10% position in it and it's up 200 to 300%, you should trim it back just for risk control. Bird in the hand's worth two in the bush.
That's right, because it's going to bring you to a 20, 30% weighting in your portfolio.
Yes.
And so you think your thesis is that G7 industrialized countries will not be able to control their spending and their debt?
It's going to take some time. And I think the interesting thing about Warsh being nominated first is the fact that Prime Minister Carney applauded the decision. And I think Carney and Warsh worked together in 2008 during the financial crisis. So against all the noise that this is a terrible decision, the Prime Minister, I think, is right in what he's doing. And I think the Prime Minister is doing the best that he can in a very difficult situation. But having said that, you've got Warsh is basically into AI, and he realizes that AI can reduce deficit spending and fraud in government. And then he's also buying into the Bessent-Trump view that we're shifting away from Keynesian economics, which is only focused on the demand curve, to the supply side, deregulation and tax cuts. And I just wish that Tiff Macklin of the Bank of Canada, looking at the economic data, and I was in New York last week, but I finally caught up to his Q&A, and he's sitting there saying, there's nothing the Bank of Canada could do. Well, Warsh would say, yes, there is, because we're focused on helping productive capital and manufacturing. Whereas in Canada, manufacturing is falling off of a table, and Macklin is saying he cannot do anything about it. There is the juxtaposed decision. Macklin is living in the dark ages, and we're getting Warsh. Now, the problem is, Andy, this is going to take time. And in this just-in-time life that we live in, people might get impatient. But you can clearly see where the Americans are going and central bank is going. And you can clearly see that Prime Minister Carney, whether he likes to admit it or not, knows exactly what's going on.
Although Canada has already cut rates a lot more than the States.
Fair point.
But you think they should be doing more anyway.
Right. The argument is, what is the neutral rate? And it's some, R star. And so when you have negative immigration and you have our manufacturing dropping off, I suggest that you need to be loose. And the Bank of Canada isn't loose. Same with the Fed. And I think Macklin is hanging his hat on the Jay Powell, Janet Yellen, Ben Bernanke era, which is wrong. Market-based measures of inflation in the United States, that takes out all the junk, under 1%. And I would suggest the same is happening here. So all I'm saying is the neutral rate in Canada is about 1.5%, and he's got to get it down there. And there are reports out there saying that if he doesn't cut, we're going to have 100,000 job losses in the real estate market. So as far as I'm concerned, I think Macklin is acting a lot like John Crow did in the end of the mid-'80s.
Keeping rates stubbornly high.
Stubbornly high. But then at the same point in time, I think Carney knows exactly what's going on. And I wish Carney would pick up the phone and talk to Macklin and bring him up to speed on what's really going on.
That's interesting. I wonder, do they talk? Do the Prime Minister and the Bank of Canada ever and the Governor ever talk?
Well, they talk, but I don't know.
No. Yeah.
I'm sure Mr. Carney is not phoning up Mr. Macklin and saying, hey, get with the program.
No.
This is what's going on. But, Andy, the point I'm making is, what does the Bank of Canada do? I mean, I'm a one-man band, right? I'm a chief economist and I'm a strategist. I figured it out. The smart money in New York's talking about this. It's not about hawks and doves anymore. It's about a regime change that's going to affect us for a long period of time. It's like we're in the early 1980s. What the Bank of Canada is doing, I have no clue.
And when you say a regime change, this rapid movement of manufacturing back into the United States, for example, Jim?
The regime is, Tiff Macklin thinks that inflation is caused by demand increasing and wages going up. And the regime changes inflation, a la Milton Friedman, is caused by excessive government spending and money creation. So if you focus on the supply curve, which is what Trump is doing, right? You cut taxes, you help out the industrial area, the supply curve moves out. You have a shift in the supply curve, and it's, I would say, economics 101, or in your, if the brokers out there, this is in your CSE handbook to get licensed, guys, right? You shift the supply curve out, down the demand curve, prices go down, output goes up. How Macklin and the Bank of Canada don't see this is beyond me.
Jim, always enlightening. Thank you very much.
Have a great day, Andy.
You too, Jim. Jim Thorne joining us there, Chief Market Strategist at Wellington Altus Private Wealth. Coming up, why a small village in Quebec could be an answer to boosting Canada's rare earth supply. We'll be right back. A small village in Quebec hosts critical mineral deposits that could be vital to Canadian self-reliance in these materials. CTV's Geneviève Beauchemin has more in this report.
Saint-Michel-des-Saints is a small village on the edge of Quebec's vast forests. Its critical mineral deposits could put it on the map of Ottawa's New World Order, this by boosting Canada's self-reliance. Quebec mining company, coincidentally called Nouveau Monde or New World Graphite, hit pay dirt here more than a decade ago.
Our metal detectors was beeping throughout a fairly large area.
Graphite says the company has many uses, including in the defense and EV battery sectors.
So it's about 4.5% grade.
Founder and CEO Éric Desaulniers says that for now, Asia dominates the graphite market.
And the benefit to Canada and all G7 countries is to have a stable source of these critical minerals, but also at the right cost point.
Last year, the mine's financing hit roadblocks as several companies in the EV supply chain faltered.
This is the graphite.
But a test plant is up and running, and in November, Ottawa recognized the mine as a major project of national interest. The federal and provincial governments have invested. To go full steam ahead, the mine still needs to secure financing. Some have opposed the mine, fearing environmental fallout, but the Atikamekw First Nation of Manawan has since signed an impact benefits agreement.
Ouais, c'est ça.
And the mayor of Saint-Michel-des-Saints says he hopes the project will go ahead.
Ça va fleurir à Saint-Michel-des-Saints.
It will bring good-paying jobs to our region hit hard by U.S. tariffs on forestry, says Mario Venn. Families will return and our town will bloom.
This is where you're going to have all the machinery.
Kevin Ducharme is the mine's environmental director. He moved to the region years ago for its lakes, its forests.
It's normal to have concerns with a project like that. We're not in a mining region. People are not used to seeing mines.
He says the company is banking on the best mining practices, the best monitoring systems. There are still many steps to go, but the target date for commercial extraction here is the end of 2028. Geneviève Beauchemin, CTV News, Saint-Michel-des-Saints, Quebec.
Manitoba's premier is set to visit Churchill this week to continue conversations around expanding the remote community's port. CTV's Alison Bamford has more in this report.
The polar bear capital of the world could also one day become a sea trade superpower.
Big energy play, defense, environmental protection. Churchill has it all in terms of nation building.
Ahead of the First Minister's meeting last Thursday, Manitoba Premier Wab Kinew spoke highly of plans to unlock potential at the Port of Churchill, announcing he will fly to the remote northern community this week to hear from locals, who he says should be at the center of the conversation.
I think the Premier being there is a really important step.
The port currently operates just 4 months of the year, shipping critical minerals to European markets and other supplies to the north. Ottawa has earmarked the port as a transformative project, seeing potential as a reliable part of a supply chain that could support military presence in the north and a gateway for year-round trade through the Atlantic.
Because of the geography of where Churchill is, it saves sailing time upwards to, a week of sailing time versus, say, going through Vancouver.
Saving time would save money, another factor making Churchill attractive. One expert says the expansion is quite feasible, but he questions what might happen to the town's other major industry.
It's one thing to be a big industrial port, and it's another thing to be a tourist town. And I'm not sure how you blend the tourist town with a big industrial port.
Manitoba's premier is scheduled to take part in a tourism roundtable and a town hall with community members in Churchill on Tuesday. He's also meeting with Indigenous leaders and expected to be on hand for a funding announcement related to marine conservation. Allison Bamford, CTV News, Winnipeg.
Up next, that latest tariff threat from Trump. This time, he's aiming at Canadian aircraft. In Bombardier's home base of Montreal, there are fears that U.S. tariffs could put Quebec's aerospace-driven economy at risk. We got more from John Gradek, an aviation expert at McGill University.
I think that this is a commercial spat that's developing between Gulfstream and Bombardier. Bombardier has been outperforming Gulfstream sales in the U.S. significantly with the 7,000, the 7,500, and now with the 8,000. Our friends at Gulfstream are not very happy with this competition, and they managed to get their audience with the president to come up with some wording in a missive last night on Truth Social that put the blame of this uncompetitive situation on the hands of Transport Canada certification.
Yeah.
So it really was a commercial spat that's kind of blown out of proportion at this point in time.
He's making accusations, as you said, about Canada dragging its heels essentially on Gulfstream Jet's approval. How long does this process typically take?
Oh, it could take years. The Gulfstream 700 and the Gulfstream 800, have been launched many years ago. It took the U.S. FAA 4 years to really go through all of the hoops and bells and whistles that are required to certify that airplane. So it's a long process, especially when you bring in new equipment, new technologies, new systems on board, which the Gulfstream did, as did Bombardier. And so it's a long process. The regulators got to do their job, and Transport Canada is doing its job, with a lot of diligence. It's not that they don't trust the FAA in terms of their certification, but I think Canada is taking the right road in taking its time to make sure that this airplane is safe to operate and carry passengers in Canada.
So would you say Ottawa's dragging its heels?
Excuse me?
Would you say Ottawa's dragging its heels on this?
Yeah, the issue seems to be fuel, right, on board the airplane on the Gulfstream airplanes, and I think that the fuel situation needs to be addressed. I think the U.S. and the Europeans have allowed this airplane to be certified with exemptions. So the exceptions was, to make sure this airplane is, as far away from cold weather as it possibly can in order to prevent freezing up of the fuel systems. So that's where we're in a situation where Canada says that's not an acceptable process. We don't deal with exceptions. Fix the airplane, please, Gulfstream. And when it's fixed, come back and we'll certify it.
Got it. Okay, so there is an actual reason given for perhaps this approval going a little bit slowly. Would it make sense for the U.S. to stop bringing in aircraft from Canada? What would that impact look like?
Oh, the question you have to ask yourself, for the U.S. to kind of back off what they've done in this latest mess, there's still a 50% tariff that is hanging over Bombardier airplanes. That would be a death knell, from in my opinion, to Bombardier. it would be something that would, price their airplanes out of the market completely, and yet open the door for Gulfstream to recapture some of its lost market share. But I think that that's still a question mark. Is a tariff going to be real, or do we have another situation where the president might just back away from doing the tariff?
You mentioned that the Bombardier aircrafts are popular in the U.S. How popular? How many of these do they sell? Can you give me an idea of how much the U.S. relies on them?
Oh, these airplanes are bestsellers. Bombardier has sold hundreds of these airplanes over the last few years, and I think that you look at there are fractional jet fleets that are around there. You have some charter jet fleets. And the most of the sales to those fleets have been Bombardier airplanes. It's a beautiful airplane. It's comfortable. It's spacious, and it's got high ceilings. It's got electronics and components, and just the general building style of the airplane is so much different than Gulfstream. So Gulfstream is seriously behind the times when it comes to a competitive aircraft to Bombardier.
Melanie Joly, the minister, has said she thinks this can be resolved. How do you see it resolving itself?
That's a good question. I think that, there's been a lot of rhetoric going around in the last 18 hours or 20 hours about this event. And I think that, cooler heads have to prevail. I think Transport Canada has been instructed not to comment. I think Bombardier is keeping its comments to itself in this area, because they know that it doesn't add it'll just add fuel to the fire. We're trying to resolve this thing through political channels as best as we can. And I think that, we might be in a situation where Canada might have to, in fact, pull a proposed retaliatory action to get the Trump administration to really take us seriously, that this is not the right way to go about developing, a North American aerospace market. I think that I've been talking today about potentially looking at trying to stop U.S. commercial aircraft from using Canadian airspace. And that's wholly within the Canadian government's capability to do that. But that would certainly send a message to Mr. Trump, would send a message to the American population that, you need Canada. You need Canada to basically make sure that your economy and your travels arrangements are made. And, exercising our sovereign rights over Canadian airspace is something that's definitely within our capabilities.
Okay, that's another front opening in the trade war. We heard there from John Gradek of McGill University. We're going to have more about that later on the show, Trump taking on Bombardier. We got the opening bells next, though. There you have it, opening bell action on Bay Street and Wall Street. At the Nasdaq, it's Western Digital doing the honors. In New York, it's Compass International. And in Toronto, it's Fidelity Investments Canada. It's time for the first 15. And let's check in on the equity markets, which took a drubbing on a Friday, and you can see U.S. stocks down yet again, slipping away from that 7,000 mark. Toronto is holding its own in early trading. There is Toronto still up more than 25% in the past 12 months, but sharply down from that record high of just over 33,176 that our market got to on Wednesday of last week. Maybe we could put up gold again, even a 1-month chart for gold, because that incredible run came to a screeching halt on a Friday. We're certainly seeing a lesson there that nothing momentum is your friend until it stops being. You can see gold finally arresting its decline, but it has been ugly. And let's have a look at the U.S. markets, because we are seeing a little more selling there. Kevin Warsh, Mr. Trump's pick to head the Fed, is seen as possibly not as dovish, not as inclined to cut interest rates as the bulls might hope, and as President Trump might desire. So you can see U.S. stocks broadly down in early trading. Couple of stocks we're tracking. Eldorado Gold was down in the pre-market, losing some altitude today, buying Foreign Mining, which is working on a new mine in Saskatchewan, in a deal valued at more than $3 billion. Now, if you compare it to the January 30th price, but of course that's a moving target because Eldorado is issuing stock here, but it's a zero premium for Foreign Mining. But there is the stock in early trading. And finally, let's have a look at OpenText, because they just announced a divestiture. And you can see that stock marginally higher today. They are selling off a unit. It's kind of breaking news. Just bear with me for a second. And OpenText stock, you can see, has sagged over the past while. They're selling an outfit called Vertica for $150 million US. And this is, they say it's non-core. It's part of its non-core analytics portfolio. And the buyer is Rocket Software, which is a company in the portfolio of Bain Capital. Let's check out some movers south of the border. We are joined by Jeff Morgan, Deputy Team Leader at the Bloomberg News Equities Team. Jeff, happy Monday. Thanks very much indeed for joining us. Oracle has been something of a fallen angel. What's going on this morning?
Yeah, they're finally catching a little bit of a bounce this morning. What they've done is they've come out and they've said that they're going to raise $50 billion, which will help fund its cloud business build-out and AI-related expenditures. This had been a question lingering over the company, how it was going to fund all of these data centers and other infrastructure that it needs to build to serve its customers. We talked to, or Bloomberg Intelligence was out this morning. This is our in-house intelligence outfit, saying that this does remove one of the key hurdles or questions that have been hanging over the stock. But it doesn't yet remove kind of the other issue, which has been lingering here in the minds of investors, which is whether or not, as they put it, OpenAI has the ability to pay the $300 billion in contractual commitments that it has made. And that is something that has been weighing on Oracle for an extended period now.
And we have a pretty big merger here, Devon Energy and Coterra Energy in the U.S. oil patch.
That's right. Both of these stocks are down so far this morning. Devon is the buyer. So if you have a share of Coterra, it's going to be exchanged for 0.7 shares of Devon. Both of these stocks are lower. Coterra was one of the worst performing stocks in the S&P after the deal was announced. The deal numbers, again, are pretty eye-watering. $21 billion as a combined stock deal. And it is all stock in this case. Had been among the worst performers in the pre-market session. Coterra worth watching over the course of the day here. I see it's down about 4.5%. Devon not far behind, but it is worth mentioning that that oil companies are down just generally today on the decline in oil prices after Donald Trump said that he was talking with the Iranian regime. And so maybe some of the geopolitical tensions on whether or not the U.S. would strike some of those targets and disrupt oil supplies out of Iran is waning this morning, and that is causing the decline in oil prices. So could be two things happening here with Coterra and Devon this morning.
Now, Bitcoin was holding its own earlier this morning, but it took a pounding over the weekend, Jeff.
Absolutely. It took a pounding over the weekend. And so that's why we're seeing a number of cryptocurrency-related stocks falling pretty sharply today. Bitcoin, if you look at over the last 5 days, it is down 14%. And part of that is just on the dollar strength. You mentioned the nomination of Kevin Warsh as the Federal Reserve Chair, or the pick to become the Federal Reserve Chair. That has strengthened the U.S. dollar, and it has led to a decline in Bitcoin. And we are seeing that a lot once again today. So Strategy, Coinbase, Riot Platforms, all of these stocks are down sharply this morning, reflecting that decline in Bitcoin and reflecting, as a result, a lot of these companies that had gone towards a crypto treasury model have seen big declines today as well. Definitely worth watching. Bitcoin is also a bit of a risk sentiment indicator, and that is certainly worth watching as well.
Jeff, thank you very much indeed. Jeff Morgan of Bloomberg.
Thank you.
Okay, coming up after the break, we're going to zero in on the earnings to expect this week. Okay, on a programming note, today on Market Call, it's one of our favorites, Barry Schwartz, that ray of sunshine, President and Chief Investment Officer at Baskin Wealth Management. And he's going to be taking your questions on North American large cap stocks. Get in ahead of the rush. You can email the show right now, marketcall@bnnbloomberg.ca. Maybe we'll have another very quick look at the markets. We did see another week open for U.S. stocks today. They have been dropping from their highs. And of course, Toronto took a hiding on Friday with the sell-off in gold. There is the S&P 500. Narrowly turning positive now. These swings in commodities, some of which has been fueled by speculators moving in and out. I'm thinking especially in copper. Chinese speculative money inflated copper last week. That has worried some investors. Canada is meeting with South Korea to discuss new trade options and the potential purchase of submarines. CTV's Judy Trin has more in this report.
Heather, Canada's Secretary of State for Defence Procurement is visiting South Korea this week to explore trade opportunities. Secretary Stephen Fair is meeting with Korean defense officials over the next 2 days. He's joined by about 24 CEOs and executives from Canada's security, aviation, and shipbuilding sectors. Last fall, Canada and South Korea signed a defense cooperation agreement that laid the groundwork for stronger ties between ministers and top soldiers. The biggest military contract on the horizon right now is the bid to replace Canada's fleet of aging submarines. The Royal Canadian Navy wants to buy 12 new vessels, and the bids are due at the end of the month. As part of his trip, Secretary Fair will visit Hanwha's shipyard in Koje. Hanwha has partnered with more than 20 Canadian companies to use their technology and materials in the production of the KS-3 submarines they want to sell to Canada.
The submarine is in the water. It's got an operational performance record. It can stay under for greater than 3 weeks. It can operate in and near Arctic, and it can be delivered in 2032 with the first submarine here.
The contract to build and maintain submarines could be worth around $100 billion over 3 to 4 decades. Whether it goes to South Korea or German competitor TKMS, the acquisition will be a big part of Canada's pledge to spend 5% of GDP on defense by 2035.
Judy Trin, our colleague at CTV News. Lots more coming up on the Open after this. Canada is opening a new consulate in Nuuk, Greenland this week in an effort to underscore the island's sovereignty and support an increased pushback against U.S. President Donald Trump's continuing threats of annexing the autonomous territory of Denmark. We are joined by CTV's Rachel Aiello. Rachel, thank you very much for giving us the time. Remind us of the importance of Canada opening this consulate.
Yeah, good morning. So the federal government is moving forward with opening this consulate in Greenland's capital for a few reasons, Andrew. One of them, the federal government is saying, wanting to just overall increase Canada's presence in the Arctic, as well as boosting its concentration and focus on Arctic security, cooperating with other NATO countries towards that initiative. I do think it is also worth noting that the federal government has been pushing for this, making plans to open this consulate for some time now. now, actually predating Trump's threats. This is dating back to Canada's Arctic foreign policy that was released in late 2024. This final official opening, though, coming now is certainly notable, specifically so the fact that the federal government is taking the step of having Canada's Governor General Mary Simon as well as Foreign Affairs Minister Anita Anand on hand for this official opening.
And I mean, this is sending as you say, the government's been at pains to stress, yeah, we already plan to open this thing. But what message is this sending to the White House?
Yeah, absolutely. I think this is just reinforcing the position that the federal government has had as Trump has ratcheted up and then eased off his threats on Greenland, is that the future of this Danish territory is up to its own people to decide. And this, of course, coming as the U.S. president on his way out of the World Economic Forum in Davos after talking with NATO Secretary General Mark Rutte about having some sort of framework of a deal over Greenland, comes as Canada's reinforcing that any future conversation will have Canada at the table in some capacity. Of course, this is tied right back to all of NATO's other allied countries coming to Greenland's defense, enforcing its sovereignty in light of Trump's threat. So having this consulate there, having the opening being done in this sort of pomp and circumstance way as we're anticipating, is only a further signal to the White House and to Donald Trump that Canada is going to stand by Greenland in any sort of efforts to intimidate, economically threaten, tariff, by military force, whatever he has in mind in terms of taking over Greenland, showing that Canada is also concerned about Arctic security, but is willing to work with NATO countries to ensure that Arctic is secure.
Rachel, thank you very much indeed. Rachel Aiello, our colleague at CTV News. Coming up after the break, we've got a pile of earnings coming out this week south of the border. Who better to walk us through them than Ryan Dietrich, Chief Market Strategist at Carson Group. That's ahead. We have a pile of U.S. earnings coming out this week, and our guest says we've been seeing pretty decent earnings so far. Ryan Dietrich joins us now, Chief Market Strategist at Carson Group. Ryan, great to see you. We're only partway through the party, but you say the earnings reports have been pretty darn good, justifying the bull market. I know the index has been wobbly over the past couple of sessions.
Well, that's right. First of all, happy Monday, everyone, and thanks for having me back. You know, we are sort of early. I think like maybe a third of the S&P 500 has reported earnings, and there's been some high-profile winners. You know, Meta did really well. Facebook, Meta is Facebook. Sorry, Meta did well. Microsoft, maybe not as well with their reaction, but the whole aggregate, once again, is really strong. We're looking at almost 12% year-over-year earnings growth right now, and it was expected to be like low fours this time about a month ago. Now, one more thing. Profit margins, according to the FactSet in the fourth quarter, are looking at an all-time record high, going back to like 2009 with FactSet data. When you have higher earnings and you have higher profit margins, Andrew, that's still a bull market in our opinion. It justifies why we're flirting with all-time highs at the time we're doing this.
What has jumped out for you with these earnings reports so far, Ryan? Of course, we're still obsessed with AI. Is any clear theme emerging there?
Well, it's been strong. I mean, you look at what the kind of the big tech names have said so far about AI. CapEx spending is not slowing down. I mean, that is something that is very true and real. Now, the one thing, if you kind of peel back the onion, there's a lot more companies to report. But the industrial group earnings right now is up like 15% year over year. It was expected to be virtually flat. All right. So industrials is that one group that's really doing well. And you and I can get into more of this. We've talked about this the last couple of months. This rotation from the Mag 7 to the 493. Industrials closed at a new monthly all-time high just last week. The equal weight S&P 500 last month in January was up 3.5%. That's a great move versus the price-weighted S&P 500 up about, I'm going to say only 1.5%. It is real that this rotation's happening, and it's being led by industrials, which to me is a good thing because that the economy's strong, industrials lead. That's probably positive.
As opposed to just being fueled by a few big tech stocks, right?
Exactly. I mean, you look at like the breakdown of the S&P 500 gains the last several years. Well, we know 2023, 2024, if you didn't have a lot of tech exposure, specifically large cap tech, you underperformed or you missed your benchmarks. Last year was the first year, again, in about 4 years, where the 493 actually added more to the overall gains. And you look again where we are now, and that's still happening. Now, I want to be very clear. This doesn't mean we don't like tech. We're more equal weight tech. I think a lot of these tech names are beaten up, maybe unjustified. They're probably going to come back. By the second half of this year, by then. But the reality is this is a global bull market. We've talked about that. There's a lot of opportunity, and it's being led by a lot of sectors, not just large cap tech, which I like.
Talk to us about this selection of Kevin Warsh as the next Fed boss. The market, apparently, there are some reservations that he may be more hawkish, more inclined to keep interest rates higher than President Trump even would like.
Well, that's right. Look at something like called Fed Funds Futures, what the betting market said when this all came out. There's not like more cuts coming. There's still 2 cuts coming. Most people agree. But if you look out further, even into like 2027, he might not be as quite dovish as President Trump wants. And no one knows. I get it. It's early. But I'll just say this. He has a long history of being quite hawkish, being kind of anti the Fed in a way, bashing the Fed every year with the Wall Street Journal article, op-ed article. He became dovish in 2017 and he became dovish again recently. Now, what was he trying to do both those times? Trying to become the leader, the chairman at the Fed, and he's been hawkish other times. So listen, we'll see. But what really happened, as everyone knows, the huge drop in metals across the board on Friday with the realization that maybe he's not going to be quite as dovish longer term as President Trump wants. The dollar did jump on Friday. It's been obviously very weak, U.S. dollar has, but the reality, a lot of questions, and it was a kind of a sell first, ask questions later mentality as it pertains to metal. But let's not forget, silver is up 65% for the year. Gold was up with 25 or 26% for the year. So both of them had massive pullbacks. I mean, you could argue crashes, honestly, on Friday. And a lot of that, again, was due to the confusion, how do I put it? The uncertainty over will he be as dovish as President Trump wants? And we are skeptical he will be, Andrew.
What about gold? Maybe we can put up a 1-week chart. Do you think people were thinking, there's such momentum here, I'm just going to ride this pony?
Yes. I mean, we heard that a lot. Now, we've liked gold for a while. We added gold to our tactical models here at the Carson Group way back in March of 2023. And I just listed some numbers. I mean, it was up 25% for the year, literally like on Thursday last week. So that's a stretch rubber band, silver stretch rubber band. It could have been any particular reason to kind of have the sell off. What's the old saying? The market takes an escalator up, but an elevator down. Clearly, that's what happened in gold and silver and across the board. Platinum, palladium. I mean, just pick it. It was a rough day. But I will say this much: we're still in the camp that this is more of a commodity super cycle that has likely years left to it. This would be the shortest gold bull market ever. I mean, copper just recently broke out to new highs. A lot of other these industrial metals are just breaking out to new highs. So we think it's the global economy is strong, like we think it is. We're seeing that in earnings season. The commodities and base commodities will continue to do well. They just, honest to goodness, just got ahead of themselves. When you're talking silver up almost 66% for the year, the third week of January or near the end of January, that's not anything that we don't know. That rubber band was too stretched, and it was due for a violent pullback, and clearly we've seen that the last several days.
Just finally, remind us of how the January indicator works, Ryan. It often points to the performance for the year as a whole.
Yeah, it's a fun one. We call it like the January barometer. So goes January, goes the year. If January's higher, like it just was this year, the full year's, the next 11 months. The next 11 months are higher 87% of the time. Wow. Up like 12% average. Versus if you're down the first month, you're up like a coin flip the rest of the year, and you're up like 2 or 3%. Not much. So this is just one data piece, but just know this. In 2022, a down January had a bear market. The last 3 years, up January's pretty good market. There's a lot more to it, but I would say the January barometer is one potential positive, kind of cherry on top, if you will, along with those earnings and profit margins, which matter more, that says it's still a bull market in our view.
Ryan, we better jump. Thank you very much. Have a great February. Always great talking to you. Ryan Dietrich.
Thank you. Appreciate it.
Chief Market Strategist at Carson Group. Let's check out a couple of notable analyst calls. Shopify is getting an upgrade to buy from neutral at a research. It says that the e-commerce platform looks attractive in the wake of recent weakness. In fact, Shopify down more than 25% from its October peak. The price target being raised here to $175 US from $166. And McDonald's getting an upgrade to buy from neutral by BTIG analyst Peter Saleh. He says a higher disposable income and a lower tax burden for low-income consumers could be a catalyst for sales growth. Now, we did see rough weather in January that disrupted sales, but analysts believe that underlying sales trends were healthy and, quote, should bounce back when the weather returns to normal. And one last notable call, some weather forecasters are calling for an early spring, including Ontario's Wharton Willie. The groundhog did not see his shadow, apparently, and we're going to be watching to see how this affects the markets. Just ahead, we got the latest headlines on markets, and we'll get a preview on what to expect from Amazon and Alphabet this week. Hey, welcome back to the second hour of our show. Doesn't time go quickly when you're having a great time? Here are the big stories we are working on the BNN Bloomberg newsroom. With yet another takeover in mining. Eldorado Gold is buying foreign mining for $3.8 billion. It's a stock deal. It's creating a gold and copper producer. Now, TD, you saw that Eldorado stock is down. TD says some investors may have concerns about Eldorado adding another startup project. Foreign is ramping up a mine in Saskatchewan, but also integrating a copper-focused asset. This deal does bring together new projects in Greece and Saskatchewan. The merged company remains headquartered in British Columbia under the Eldorado Gold name. U.S. President Donald Trump is getting ready to launch a strategic critical minerals stockpile, according to Bloomberg. This $12 billion stockpile is aimed at protecting manufacturers from supply shocks and cutting America's reliance on Chinese rare earths and other metals. Apparently, this reserve will include minerals such as gallium and cobalt. They are used in products such as iPhones, batteries, and jet engines. Shares in Disney down, wow, look at that, almost 7%. The media and entertainment giant beat profit and revenue estimates in its latest quarter, but the outlook disappointed analysts. Disney says it expects operating income in its entertainment unit to be flat versus the previous year, and it's looking for only modest growth in parks and cruises. Now, that tepid forecast is partly due to increased costs, but also headwinds related to international visitors reluctant to come to the U.S. And there is a look at the TSX showing some signs of strength after an ugly sell-off on a Friday. And let's have a look at the U.S. markets. Futures were pointing down prior to the open, but you can see U.S. stocks now moving higher. Amazon and Alphabet are set to report their latest results this week. Let's get more on that from David Dietz, Chief Investment Strategist at Dietz Wealth Management Group. David, it's great to see you. Sometimes I think about Amazon and Apple. You could make a case that these would be stocks just to buy and hold forever without even looking at them now, because they've grown so much. Maybe we can put up a 10 or 20-year chart. But Apple, of course, has had some bumps along the way, particularly lately.
Yeah, so absolutely. I mean, they have been all-time legendary winners, and the question is, where do they go from here? There's kind of in slightly different situations. One, of course, Apple's highly dependent on the iPhone sales. By all accounts, the new version 17 is doing extremely well. But on the other hand, of course, people have choices. They've got the Samsung, they've got the other brands, and of course, at this point, it's all about what are the capabilities of the phone. Apple has lagged a little bit in terms of incorporating AI capabilities into the phone. And of course, that's one thing we're going to be watching. There's also been a knock on the iPhone 17. There's not really that much better than the 16. Nevertheless, people are buying that. And of course, we also need to look at the all-important service aspect, the various apps and so forth from via the App Store that they're selling, which has a higher margin, higher growth prospect. We need to hear from them on that.
Yeah, I'm just looking here at a 5-year comparison between the two stocks. Apple has been a double over 5 years, whereas Amazon has been a laggard. It's up only 43%. I wonder why. Is that partly because of concerns about competition from the Chinese e-commerce players?
Well, that's one aspect. The other aspect, of course, is valuations, where Amazon has always had a nosebleed valuation. For the most part, even people like Warren Buffett said Amazon has been just a fantastic company, but you are paying at certain times price-earnings ratios that were approaching triple-digit levels. So I think that's one reason that there's been a difference in terms of outcome. Apple, for example, when Warren Buffett's Berkshire Hathaway started buying it, it was down in the low teens price-earnings ratios. Now, of course, it's a lot more expensive. So that's one thing to watch. In terms of Amazon, of course, they've got two great businesses. They've got their hyperscaler cloud business that they're marketing very successfully. They're a leader there. They've also got the Amazon store, where, of course, they started with books. Now they sell everything, and now they'll sell everything on the part of third parties as well. That's a lower margin business, but still, AI is stalking all these companies, and of course, they're trying to make strategic investments with AI partners because they need to incorporate that rapidly into all of their businesses. That's not going to come cheap. We heard from Microsoft last week that if you spend too much and can't show the results, there's going to be a nasty sell-off. But we also heard from Meta last week, where if you spend a lot and can show Wall Street the results in terms of profitability, you can fare very well with your stock. And so that's what we're going to be looking for with Amazon.
Amazon, of course, put something like $70 million into that movie about Melania Trump. Will you be going to see that one, David?
You know, it's not on my calendar, but it's all about what my wife wants to see. I'll be quite honest with you.
Okay, that's a good policy. All right. You have some stock ideas for us. Humana. It's been tough on the health insurers, but you see upside here.
Yeah, so Humana's down about 2/3 from its all-time high. I like Humana because it's in one of the best areas of the healthcare business. It's in healthcare insurance. It's focused on seniors. It's also focused in the Sun Belt area of the United States, which is gaining population. So the problem with Humana is also its forte. Its forte is the so-called Medicare Advantage. In exchange for having a restrictive network of doctors that you go see, you pay less. You have caps on your out-of-pocket costs. You can get dental. You can get vision. You can even get gym memberships. That's very attractive to America's seniors, which is the fastest growing demographic here. And so their business is going leaps and bounds. However, they need to get reimbursed from the government. And unfortunately, the government's coffers are under pressure, and they just announced, instead of the 4 to 5% increase in the reimbursement to the Medicare Advantage players, something that's about zero. Well, who knows what's going to happen? But to me, it sounds a lot like those initial, back in April of last year, those initial ginormous tariffs, which were initial negotiating posture, and then of course Trump retreated. And I think we can see that here, because at the end of the day, the insurers are going to make money. They're just going to have to reduce the benefits if they don't get the right reimbursement. That won't make seniors happy. Seniors vote. So I think that the downside here with Humana is a lot less than the potential upside if the government relaxed those reimbursement policies.
Campbell's, that stock's been under pressure. And of course, the packaged food companies have had trouble in some cases from generic competition.
Yeah, absolutely. And artificial dyes, and they've been the punching bag for everything unhealthy in America today. However, at this point, you're at about a 10-year low with the stock. Wow. It's trading about 11 times earnings. It's going to generate about $8 billion in revenues, but it's only a $6 billion company. You've got a nice 4% plus dividend. I think this is a situation where they've got new leadership in there. They can cut costs. They can stay really focused. Of course, their snack business, I think, is very profitable. You got your kettle chips, you got your Cape Cod chips, all those things that we probably shouldn't like as much as we do. So I think you've got some iconic brands on sale. I think the consumer staples area could well take the baton if, in fact, people continue to kind of shift out of the hyper expensive mega cap techs and start looking for other areas, including areas that pay nice dividends.
And H&R Block, we're all looking forward to tax season. What attracts you to this name right now?
Yeah, so this stock, again, is down about 40% from its high. Wow. Is paying a 4%, about 3.5% dividend, about 8 times earnings. Very, very cheap. The concern has been that, AI is going to make doing your taxes a whiz. Well, I think that is an exaggeration. I also think with the One Big Beautiful Act bill that's been enacted, there's going to be some additional provisions that people are going to want help on. H&R Block is an iconic name. That business is growing. In fact, it's projected to grow earnings in the low double-digit percentages for the next 3 to 5 years. It's also a relatively small company that could easily be put into the pocket of one of these large financial institution players. With tax season coming, I think they're going to see a surge in business. They need to stay focused on that. And I think this is a nice way to hang out and collect a nice dividend in an otherwise very pricey market.
David, thank you very much indeed. David Dietz, Chief Investment Strategist at Dietz Wealth Management. We have lots more, including a drill into that big deal in the mining sector. Yet another takeover is going to see Eldorado Gold buying foreign mining. Investors right now seem to have reservations. We'll get more after the break. Eldorado Gold is buying foreign mining in a deal valued at more than $3 billion Canadian. Let's get more on that from Bloomberg metals and mining reporter Sibylla Gross. Thank you very much indeed for joining us, Sibylla. Remind us what kind of company this is, because Eldorado is making a bet on copper here.
Yeah, look, good morning, Andy. I think, Foran is known for having big copper deposits in development, I should say. But this really is a gold deal. I think the companies came out and said this morning that the combined portfolio of these two companies would be really heavily weighted towards gold and not as much towards copper. But obviously, having copper in the portfolio, with these prices is not really a bad thing either. And I guess, it's the latest announcement really in what's been a really frenzied M&A period in the mining space, with prices for some metals just going parabolic, including gold, notwithstanding the abrupt sell-off we've had in recent days, and copper as well. And the thing is, investors really want to see companies grow with prices so high. There's obviously an incentive here to grow your output while prices are at historic levels in many cases. But the thing is, we don't want to see companies overpay for things. So you'll see a mix of, companies investing in their own organic growth profile and also M&A. But, the key thing here is that, investors really don't want to see companies overpaying for these assets.
The gold stock's broadly pretty flat in Toronto today, but Eldorado is down more than 10%, or around 10%. But of course, they are issuing a bunch of stock here, so you often do see that reaction, I guess, immediately post the announcement of a deal.
Correct. Yeah. I mean, look, it's obviously not a great reaction as markets opened this morning, and I think a few analysts have pointed out some challenges with this deal. I think there are concerns really with Eldorado adding another development project or startup project when it's got its hands full with its own development project in Greece. And I think, there may be challenges as well that investors are concerned about in terms of integrating copper into the portfolio. It is good that Eldorado is increasing its exposure to Canada. However, that's a good, potentially a good characteristic of this deal. I think the other thing that's quite interesting about it is that it's structured as a nil premium merger, which has been a bit of a topic of conversation in M&A in mining in the last few months or so. This nil premium structure is seen as a much more friendly way to get, mergers across the line. And also, with the volatility we've seen in metals prices lately, there are, reservations, understandable reservations really about overpaying too much. We don't know where the gold price is going. We never thought it would be at these levels, and we've seen a huge sell-off in recent days. So that's another interesting aspect of the deal this morning.
Yeah, it is interesting. I was looking at the news release. They say, hey, it's an 8% premium to the 20-day volume weighted average, but compared just to the Friday price, it is a nil premium. Any comments on the M&A landscape in mining for the rest of the year? We've seen so many giant deals.
Correct. I mean, I think the interest in M&A in mining is not going away. I think, relating this back to gold, I think there are some questions about valuations. Gold stocks do look quite expensive, but I don't think, anyone's going away thinking, gold is still up at historically high levels. There's a lot of obvious demand for gold at the moment with so much uncertainty in the world. And, we've had commentary from Zijin Mining, which is now it's a Chinese company, and it's one of the biggest diversified miners in the world. And last month, the new chairman came out and said, they're really wanting to ramp up acquisitions and growth, and with a particular focus on copper and gold. So I think the interest in M&A is going to be as hot as it's ever been. Getting deals over the line may be a bit of a challenge.
It's fascinating that, the whole politics of the zero premium. Actually, I should mention they're nothing to do with you. We were having a bit of trouble with the Foran mining chart. That it is interesting, isn't it? Gold companies, they're wallowing in cash right now. And it must be tempting to buy stuff. Sabrina, we better jump. It's great to have you. You're new to Toronto, to the Bloomberg team on the mining side. And it's really great to have you join us on the channel.
Thanks for having me.
Okay, that is newcomer Sibylla Gross, who is Bloomberg Metals and Mining reporter. Sorry about that Foran chart. We're fixing it. Coming up, Disney posted a strong first quarter, but investors didn't like the forecast, and they are preparing for shake-up in management. We'll have more after this. Disney beat estimates in its first quarter, and most of the profits came from the Parks and Cruises unit, led by Josh D'Amaro, who is set to succeed the current CEO, Bob Iger, later this year. Let's get more from Ken Leon, Director of Research and Global Fundamental Research at CFRA. Thank you very much indeed for joining us.
Great to be here.
What jumped out for you with the Disney quarter and the forecast from the company?
Well, it's the beginning of a new fiscal year, and it's one where we really didn't see all businesses firing on all cylinders. It's also a transition year, as noted, with a change of management. All that leaves investors, I think, a little bit questioning execution risk here. We certainly did see some improvement in operating income, particularly in the streaming business, Disney Plus. But overall, there's lots of puts and takes. Disney with sports segment, with ESPN, it's a tremendous franchise to have. But the sports right cost of getting major leagues has added to expenses and put some pressure on operating income. So I think in total here for Disney, it's how do you get all the different businesses moving in the same direction so that we have a strong quarter. That was not the case with the first quarter just reported.
Can you remind me, are investors still worried about streaming and the enormous investment there and the risk that it won't produce returns?
Well, they are. And you just can't drive subscriber growth without really having a good business and generating positive operating income. It's interesting. Disney has followed Netflix and not really disclosing subscribers anymore. And they just point to nearly a doubling of operating income in the quarter versus a year ago, and getting those margins up to about 8.5%. So that's pretty good. There's more work to be done there. But also, Disney provided less information related to, they have a legacy business, which is the broadcast network business. And that showed, again, a single-digit decline in advertising. So the pivot is happening. And Disney, of course, has to really orchestrate strong improvement in the streaming business because the networks business is still declining.
And it was interesting that the foreign visitors, lots of Canadians, are skipping America as a destination right now for their travels, and that is not great for the parks business.
Well, you're right. It's not only coming to the domestic parks, but its attendance has been not as strong as expected. Even in Florida with Disney World, for average Americans to take their family to the parks for 1 or 2 days has gotten too expensive. Mm-hmm. And I think that has impacted the ability of getting stronger revenue growth, but also as they have large capital investments. So, you raise a good question, because really the strategy and North Star, if you will, for Disney is the theme parks, and they expect to spend $60 billion over the next 10 years. Wow. With new venues and improvements. And then, of course, outside the U.S., the image of the U.S., and Disney is strong, but you watch how they do in markets like Shanghai or in Europe and Paris and anywhere else. These become issues.
The longer term, would you be a holder of Disney? I mean, at one time this was a stock. Well, that may be going back more than a decade. People thought, well, Disney, that belongs in every portfolio.
Yeah. So as investors, we look at Disney in terms of when could they have attractive returns on invested capital and the ability to generate not only higher profitability, but return of capital. Disney did buy back $2 billion of stock in this quarter reported versus about $740 million a year ago. But to your point, if this is going to be a core holding in the communication services sector, which is critical for the U.S. equity market, they're going to have to execute better. And when you look at the valuation and target prices you put on a stock like this by over 30 analysts covering this stock, looking at the last year or two is slower growth or not having execution across the businesses. So that's a show me story. and one where I think whether it's institutions looking at mutual funds or individual investors, you want to see more visibility of really consistent performance.
Right. I think actually I overstated it there at the top. Josh D'Amaro, head of the theme park business, he is widely expected to become the new boss, but I don't think that has been confirmed.
It has not been confirmed yet, and it's expected to be soon. I think Bob Iger will look to retire from CEO, maybe from the board too, sometime during the year versus the end of this fiscal year of September. And, it's interesting. James Gorman, former chairman, CEO of Morgan Stanley, leads the search. He's on the board of directors for Disney. So yes, it looks like an internal candidate again will become the new CEO. But the last time around really wasn't successful.
No.
We think this one will be.
Thank you very much indeed. Really appreciate it.
Thank you.
Okay, we have got to take a break. That was Ken Leon, Director of Research and Global Fundamental Research at CFRA. Coming up, U.S. regulators are backing the U.S. president's attack on Bombardier certifications. We have yet another mining deal this morning. Shares in Eldorado Gold are down. That company is buying foreign mining in a friendly transaction. The price on paper is almost $4 billion Canadian, and it creates a gold and copper mining company. Some analysts, or at least TD, says the transaction may raise concerns among investors about Eldorado adding another startup project, but also integrating a copper-focused asset. The deal brings together new projects in Greece and Saskatchewan. The combined entity will remain headquartered in British Columbia under the Eldorado Gold name. Diane Durham says it posted a loss of $88 million in fiscal 2025. Revenue was just over $100 million in the first quarter of this year. This delayed financial filing is expected to revoke a cease trade order that was issued on the stock by the Ontario Securities Commission in December. And DIE does expect its shares to resume trading on the TSX. The software company has been focusing on restoring operational and financial stability and says it will outline its full strategy at a shareholder meeting in March. Tyson Foods posted sales and profit in its latest quarter that topped Wall Street expectations. But the meat producer's beef business posted a loss of $143 million US in the quarter. And Tyson says it will close a beef plant in Nebraska. As a result, the company has narrowed its expected operating loss in its beef segment, but stuck with the outlook for the year. North American markets broadly higher this morning after a sell-off on Friday. Coming up, we've hot picks in technology. Our guest says 2026 could be a breakout year for the top selection. That's ahead. On Hot Picks today, we're focusing on technology, and our guest has Amazon as a top selection. He expects 2026 will be a big year for the company's cloud computing division, given its strong growth prospects. He also likes the outlook for advertiser demand. Let's get more from Scott DeWitt, Managing Director in Equity Research at Wedbush Securities. Scott, thanks very much indeed for joining us. We touched on this a few minutes ago. Amazon stock something of a laggard over the past 5 years. Before you tell us what you like about the company, can you remind us why that is?
I think that that some of the driving force has been in the retail business. The company was growing into capacity that was built towards the tail end of the pandemic, so that was part of the story. I think it's also been kind of digesting, the exit of Jeff Bezos and the transition of the management team, and the effect that that's had on the multiple. And then I think more recently has just been the perceived underperformance of AWS relative to peers. Those would be the three factors I'd highlight that have led to kind of a multi-year underperformance for the company.
But you do see brighter times ahead. What is the main thing you think the company has going for it right now?
So the multiple's lower, that's good, but the fundamentals are as strong as they've ever been. I mean, the retail business, has digested that excess capacity. Margins, both domestically and internationally for retail, are rising. And the advertising business is also adding incremental margin to the business as well. And that's about a $70 billion, 50% margin business now. And then in addition to that, the third kind of issue, that we highlighted was the AWS underperformance, and that's starting to fade away now in 2026. And you're likely to see accelerating growth for AWS into the mid-20s, which is quite significant for a $150 billion business. So I think all the factors that have been kind of driving the underperformance in recent years are set to reverse, and we think that's a great setup that could lead to a 30+% return this year.
Can you remind us, why has AWS had trouble competing at times?
Well, they had a very large legacy cloud business, and so they weren't like a first mover in terms of providing AI capabilities. There's been an emergence of a whole new category with Azure pushing hard in AI early on, Oracle more aggressively getting into that business, and then the creation of all these neo cloud companies. And so there's just it used to be AWS was the only game in town and had a huge lead relative to its peers. And now there's a lot of alternatives, and some are growing faster because they're totally levered to the AI theme. And so that's what kind of repositioned Amazon from being the leading asset to being kind of one of many in recent years.
Let's get to your next name, Meta. Mark Zuckerberg doesn't hold back when it comes to betting on future technologies. He's spending heavily on AI. Should he be given the benefit of the doubt here? Is he likely to get it right?
I think to the extent that growth continues to hold up, it's proving that the company is getting it right. And so while the spending is elevated now, this is spending that is very long dated and will peak. And so when you look at the revenue growth that they guided to in 1Q of 30%, for a business that's over $200 billion in revenue now, that's significant growth and taking meaningful share. In fact, if you run a model over the coming years, there's a point where within this decade that Facebook advertising revenue exceeds Google, and so I think that if growth ever falters while spending is elevated the way that it is, then I think that that would be concerning. But so long as the growth holds up, I think that's evidence in and of itself that this is working.
And then finally, DoorDash. What attracts you there? Obviously, I'm not a great person for getting food delivered. I like to get out of the house. I don't do that enough. But obviously, it's a change in society. Actually, the cover of the current New Yorker celebrates those delivery drivers forcing their way through the snow. But in any case, DoorDash, what attracts you to that stock?
Right, so DoorDash is the leading restaurant delivery service in the U.S. with almost 70% market share, and it's built a collection of businesses outside the U.S. through acquisition that they're now replatforming onto DoorDash's platform, and that's led to an investment cycle that the market didn't like. It caused a pullback in the stock, and that's when we kind of entered it and started to recommend the company. And so I think what will happen is you'll see the spending peak and the growth rate, similar to Meta, hold up, and the multiples start to go back up as the 26 progresses. So it's a phenomenal management team. They're spending on all the right things, this kind of coordination of the platform, as well as extending into grocery and general merchandise. And, we're just at the front of it. When you're at the front of an investment cycle, the market never likes it. And so as an investor, I think you have to assess whether you think that the company is justified in spending what they're spending to generate a return over time. And with DoorDash, we very much think that that's the case. And so I think DoorDash will be more of a back half 26 stock.
And can you remind me, DoorDash, are they a global player?
They are. They've bought Deliveroo and Wolt outside the U.S. They were quite small prior to that, but they're a global business now, and those two acquisitions are the two that they're re-platforming onto the DoorDash platform in the coming year.
Well, thanks very much. So that latest New Yorker cover, I can't show it right now, by Peter DeSev, it shows those delivery workers navigating a blizzard, and it's called New York's toughest. And we got some tough customers here in Toronto too. I don't know how they do it. Thanks very much indeed for joining us.
Thank you.
Scott DeWitt, Managing Director in Equity Research at Wedbush Securities. The U.S. Federal Aviation Administration says it expects other countries' aviation authorities to accept its certifications. This comes as U.S. President Donald Trump threatens Canada over certification of Gulfstream jets. We are joined by Bloomberg aviation regulation reporter Alison Verspril. Alison, thanks very much indeed for joining us. Just give us a bit of context here, please, before we get going. What has President Trump said?
So President Trump, he said that he was going to impose a 50% tariff on Canada for any aircraft sold into the U.S. And then he also said that he was going to, quote, decertify Bombardier and other Canadian aircraft. And so what the FAA administrator said in response to that was, they're expecting other countries to accept these certifications and these approvals, and for not to take, several years to do so.
And President Trump's complaint was that Gulfstream was having delays getting certified here?
Yes. So he, complained specifically about Gulfstream. We know for some of the newer models of these Gulfstream planes, the FAA in the U.S. has provided exemptions from these rules that are intended to ensure that water, if it freezes, these droplets of water don't impact fuel flowing to the engines. And so we know that the U.S. gave an exemption and Canada has not. So that's one of the things that's been slowing things down. But that is the complaint that's been raised.
And Bombardier, obviously top of mind here because they're a global player in private jets and the U.S. market, so important.
They are a global player in private jets, that's true. They also have, some of these regional jets that operate in the U.S. right now. At this point, there are not really new aircraft being manufactured, but I know one of the big concerns among the regional players and others in the U.S. was whether, aircraft that they're already flying, that they have in service, would be impacted by this and essentially grounded. And what we learned shortly after the president made this announcement was that a White House official said that's not the case, that they're intending for any sort of action to only impact new planes. But we're still waiting to see how a lot of this plays out.
And just finally, any industry reaction right now?
So right now, I think the biggest reaction we've seen is there's a lot of confusion. People have never really heard of this idea of decertifying planes, and they're unclear on how this exactly would work because you would assume there would have to be some sort of safety issue normally to do that. I think, the comments about this not impacting new planes, I think that gave, people some comfort. But I think the biggest thing that we're looking to see is, whether this really is only going to impact business jets. There's still just a lot of details that we don't know. So some confusion and some waiting for those things to be sort of fleshed out.
Thank you very much indeed for joining us. That's Bloomberg aviation regulation reporter Alison Verspril. Coming up, we're going to talk to a young Canadian content creator from Newmarket, Ontario, who is gaining global attention on social media by posting clips of his one-on-one basketball games in public parks all around the world. Stay tuned. Our guest has built a global brand by traveling the world and playing pickup basketball against strangers in public parks and posting it to his social media. He's got millions of followers, billions of monthly views, and he says his career right now generating well over 7 figures annually. We're joined by Matt Kapites. He's content creator and founder at ISO That. Thank you very much indeed. This is amazing. So you've been to more than 20 countries. I think you're getting up towards 30 countries now. Your basis is you just go to a public park and you take on challengers.
Anywhere in the world, if they want me to come, I'll make sure that I get out there and I'll play against anyone. It ranges from all ages, all demographics. It doesn't matter who you are. We're very inclusive. We're trying to grow the sport of basketball, get people healthy, playing 1 versus 1, being competitive. Anywhere in the world, it does not matter. Even if they don't speak English, we integrate into the culture.
What got you into this? Where were you in life when you started on this road?
I've traveled around the world beginning when I was 15 years old. High school basketball around the world, college around the world, crazy places like Alaska. But the social media part started when I was 21, and I noticed that social media was growing, and 5 versus 5 basketball on the streets was very popular. But it wasn't until, my father shared his love for UFC and WWE, where we kind of combined those elements into basketball, and we started doing 1 versus 1, the easiest, most repeatable model around the world in every single country. And that was probably this last March. We started and we blew up over 2 billion views monthly, 6 million followers. It's been an amazing ride so far.
And you're known as MK, apparently, in the social media world. I'm curious, if you find yourself playing a kid or an older person, do you tone it down a bit?
No, man, the rules are up to 5. The score is up to 5. So if I play against a kid, I've played against grandfathers, I've played against uncles, I've played against female basketball players. If it's up to 5 and I'm lazy on defense and they hit 2 threes, automatically threes count as 2s in my game. That's 4 points. So it's very competitive against any age, and I think that's the beauty of it. You can play against an NBA player and get close to them. You can play against a girl. It's very inclusive that way, and the rule structure is its own. It's should be trademarked, actually.
You're into the $1 million bracket now in annual income. Where is that coming from?
Humbly, I am. It's coming from a lot of different sources. My father said it's time to get an accountant, which was a bit ago, and we're finally a bit organized. But it's coming from numerous streams. It's coming from brand sponsorships, coming from ad revenue. It's coming from inserting ourselves into traditional media. You mentioned ISO. That's a television show we're working on with hopefully Netflix or Amazon Prime or whoever the best fit is. But when those revenue sources started to add up, it's well over $1 million. Absolutely.
Now, obviously, trash talking is part of the game, mocking your opponent. What's your policy on that?
I'd say it's competition. When you're in between the lines, it's competition. It's in every sport, whether they broadcast it or not. My feel is real, raw, and authentic. That's what I go by, and people appreciate that. So the trash talk is a huge element, but when the game's done, when the game's finished, it's all respect. You shake hands, and a lot of the players we play against are very happy with the results they're getting. We had a gentleman from Brazil. He made 75,000 followers and counting in less than 24 hours after playing me. And guess what? We were trash talking the whole entire time, but now it's all love in our Instagram messages.
Yeah, it's interesting. The game has that element of theatre to it. I mean, it strikes me, we hear, oh, kids are not exercising enough. They're sitting on the couch looking at their phones. So this sounds like a healthy thing. You're getting people out there and exercising.
That's one of my favorite things. You know, I had a fitness program growing up with my father, and, you know, we helped people around the world online. Now going globally to all of these countries, and we're able to exercise, you know, 6, 7, 8 games in a row myself. I get very tired, but, you know, the opponent coming in and playing for that 20 minutes, it's only up to 5. They're huffing and puffing after, and it's a great exercise for them. And I love that we're challenging older fellas. We're challenging the younger generation. Everyone's getting fit. And I think it's a great positive message through the sport of one-on-one basketball and competition and ruthless aggression.
So you have your league, or you're working on a league called ISO That, and you're trying to get it onto a streaming platform. Can you tell us how that'll work?
Yes, sir. So I've actually already filmed 2 seasons, over 40 episodes as my pilot. I self-directed, executive produced, filmed, everything, edited that myself. And we had some help from Electric Panda Entertainment. Yaz Talat, my brother, he brought it to his connections. I brought it to some of my connections. And we've actually partnered with Mike Tolan Productions, who is a the formerly Mandalay-based sports entertainment in charge of The Last Dance, Redeem Team, amazing documentaries and films they produced. So with the powerhouses of, you know, Electric Panda and Mike Tolan, I think this has a fantastic chance to get onto a big streaming network, especially with the right now live streaming in sports. You look at Jake Paul and Mike Tyson on Netflix. This is something that has the potential for that within this format and show of 1v1 basketball that doesn't exist until I brought it to the world.
Have you taken it to New York? I always think of that's the world capital of asphalt basketball.
Absolutely, Andrew. We took it to New York recently. Last week or 2 weeks ago, we were in Brooklyn, New York with Nike and Devin Booker's new release of his shoe. And it was unbelievable. Believe it or not, it was indoors, and it still captured that New York outside kind of Rucker Park atmosphere. It was unbelievable. Lots of trash talk, you better believe that. But it was a great time, and shout out Nike for having me there.
But you've been working with Nike and Adidas, the 2 great rivals.
Yeah, it's we're going to be working with Adidas very shortly for All-Star Weekend, and it's funny how, you know, traditionally these big companies wouldn't really want to touch this, but now we've exploded globally. Like I said, over 2 billion views monthly. A lot of traditional companies like the Nike, the Adidas, the And Ones, they're all taking notice and they want to be a part of this. Now it's about finding the right fit.
And you're working with Young Young LA, I should say. That's a U.S. brand?
Yes, sir. Young LA is a newer clothing brand, lifestyle, street, everything. They're fantastic. My brother Gary and his brother, they brought me on about 4 months ago, and that's been fantastic. The best clothes you can get, the coolest styles. They really support sports and fitness. Another guy, Ryan Garcia, famous boxer, he's sponsored by them, and they're just growing with the athletes they're bringing on. And I'd like to say that I've kind of taken the forefront on bringing Young LA to the basketball scene, which is amazing. Great apparel brand.
What about China? Have you been over there? They love basketball.
Absolutely. I think China's one on the list. I think anywhere in Asia. I try to go by continent. So anywhere in Asia very, very soon, probably this year later on. But we still have Europe at the start of this year. I want to go to the Australia. I want to go to, there's so many places on the list. And it's not tiring. It's just about finding the right time and the flight schedules and whatnot.
Yeah, I guess jet lag is, give us a tip for jet lag, Matt, before we let you go. How do you deal with it?
Spa days. Take your spa days and rest. You know, you go to a spa, you rest all day, you're good to go, and you beat the jet lag that time. So I don't really have jet lag because I rest a lot. I drink a lot of water, and I eat very, very healthy on the road.
Matt, thank you very much indeed. Fascinating story.
Thank you, Andrew. I appreciate you, and thanks, Bloomberg.
Matt Kiatipis is a content creator and founder of ISO That, and a one-on-one global basketball star. Thank you. Well, I think that would be something for me in retirement. I'll try that. That's it for the open. Morning markets coming up next.